Hi there, welcome back to PreciseAlgorithmTrading.com. This is Dave, and let's talk about the markets. So today we are getting some rollover. This is the E-mini futures contract. The S&P will look similar. I was going to say the same, but it's just similar. If you ascribe to wave theory at all, this push from where the cursor is here, crosshairs, that's 316, or any of this really, up to 4.4, and then a pullback. That could be considered the impulse wave. I would actually look at the whole thing like it's an impulse wave, and then you get a pullback, and then you get a chance to go from that into possibly what could be a wave 3. So this is wave 1 up, wave 2 back, and then potentially a wave 3 going higher. I actually have mathematical studies that are based on this, that I didn't design, that other people did. It'd be interesting to pull those up here, but they might be trouble just to find them and throw them on here. But in any case, I see this way because we're getting up here back to the we're at these recent highs from a month or two ago, and now we should have buildup in this area where this red square is, brownish red over here, and maybe some pullback into even this zone where this diagonal is, and then hopefully find some footing and then take off from there to back to the upside. If all the bullish percent indexes roll over in the meantime from there, then you have to live through that whole cycle. It could go all the way probably down into this blue line right here. It's another moving average, which if you notice, these two averages generally correlate. I mean, that blue line is almost the purple line over here on the weekly chart. So it's as close to that as you can get with just easy math. So that's what I'm looking for, is really build up and consolidation in this zone before we can take off higher. But we need to get enough churn and enough people wanting to sell this thing so that the buyers can step back in and take them underwater. And that's what the markets do. So that's the ES, the E-minis, and we've got these target dots to the upside. They're not going to make it easy on us. I'm still looking for this longer term red trail scan down here. The indicator, at some point it's gonna flip and not be all pink anymore, and you can see the back and forth churn that it's had, and it will turn to where the majority of it's going to be this light blue color. That hasn't happened yet, but I'm still looking for it, and then that's going to be along with a couple other indicators that we use. We've got a Harvard study that I've shown before. You start plugging that thing in and it starts taking off, then we get a new bull cycle. And I am expecting that at some point here in the next year or two. Let's look at the NASDAQ. There was some pretty decent damage done, like just in general, to the bulls today. And in the past, when I was just learning how to do this stuff, I would bail. But if you look at these charts, they're actually really nicely bullish. And we got a buy signal today on the NASDAQ, which is interesting on the daily. So this is kind of what I'm talking about. We didn't really get the build-up at the breakout level on the NASDAQ back here in March 22nd. We did get the build up across after the breakout technically is kind of there, and then we took off higher. Now we've had some more build up. Now the question is, are we going to go higher from there and just keep pushing higher, or does this thing need to back and fill? But now it's got the bullish indication of the buy, so that's really interesting. In the meantime, the transports are firing off still nicely from the lower end. So they've been lagging, but they're sure showing some decent signs of possibly trying to either catch up or even possibly at some point take the lead. So that'll be interesting. And let's look at the Dow, because it's been, I think it was lagging and then it took off. The Dow Jones Industrial Average, that is. Let's look at, as soon as the technology catches up and it gives me a little thing that says, hey, we had a performance issue, which is becoming irritating. There we go. So we had this, it was sort of like the, what I'm saying with the transports, it was lagging down here, and then it took off all at once, and now we're pulling back. And again, that's an impulse wave up and a pullback, potentially 1, 2, 3, but normally the third actual wave, especially an Elliott wave, will exceed the first wave. So we'll see if that plays out this time. It doesn't have to, but that's a pretty good rule of thumb. Oil, let's look at oil. So oil did that sell-off that I was looking for. Unfortunately, I didn't wait around for it. And it is what it is. We'll keep moving. Not really anything to do with this one right now. It's got a sell signal on both indicators right now. And all right, that's enough for really the overall market. So let's look at, I'm going to just pull up Apple, because a lot of people follow Apple, but I mean, Apple's been going higher. It's actually in a buy signal and a sell signal situation, and you know, it's looks to me like it wants to continue grinding higher. But we do have earnings over here. When is it? Well, it's messing with me, so when are the earnings? Five, 4. So basically we got 2 weeks to make some decisions here. We can stay in it, but we better know what we're doing, or we can just get out and collect our gain here. But anyways, you can see we got bullish. This is what I'm talking about. We had an impulse wave off the bottom, and then a pullback, and then the third wave, which arguably we might still be in, although we had a little pullback in the middle of that. So, and on we go. Looking at stockcharts.com, let's look under the hood. The NYA is up a little today, very little. The NASDAQ down a little today, very little. The S&P 500 down almost 1% today. The OEX, the S&P 100, down 2.82%. The NDX tacked on some O's to the downside. Now what we got to watch for are, will these O's continue to go down and then get past 52 to the downside and take out the previous column of O's and go further lower than the previous column of O's. If that happens, we've got ourselves a point and figure sell signal on the NDX. Based on a lot of other indicators and things I see in the markets, I don't really look for that to happen, but if it does happen, we're going to be hopefully positioned properly to either be mostly in cash or a lot of short at that point. And let's go back to this. All right, these are our automatic trades today in our automatic trading system. I'll call it almost fully automated trading system. It does all the trading all by itself. Just have to turn it on and turn it off every day. And as I think I've noted before, you don't really even have to do that. I just think it's good computer discipline. So this is the Dow, and it actually fell further than I'm even comfortable with, but it is what it is. And then it bounced right off of the zero level for the quarter, which is aggravating when you go from $24,000 in the quarter back to zero. That's trading, guys. You got to be able to hold on for the pullbacks. So this is what it looks like on a 6-month basis, and we're still alive. This is the Russell. Again, it's gone deeper than I wanted it to, pulled up a little bit, now it's thrashing. And on the longer term, it's not pretty, but it's fine. If I open this even longer than this, then it's still fine. So the NASDAQ is the one that's really working right now, and this is how these work. They go back and forth with each other, and it's best when they're going all at the same time, but that's pretty rare. It happens during the year, but we got a new green dot today, which is awesome. We had a new green dot the other day, and then a pullback after that. And when you put enough of these green dots together in a row, you get this type of action. So that's what we're trying to get, and that's it on the 6-month basis. So that's what I got for you guys tonight. Hopefully everybody's doing okay and batten down the hatches in case this thing gets a little bit more volatile before it decides to get more bullish again. Take care, guys. Good trading and good night.